Okay, so today we're going through May-June 2021 question paper component 13, and we'll start from the bottom again. Okay, so again, similar to the other papers, anything that's from question paper 11, which question 30 is, I'll just circle the correct answer and go to that video for a full explanation if you're still confused. Okay, so we're starting at 29. What does the foreign exchange rate between Malaysia and the US measure? Okay, so the thing to remember is a foreign exchange rate measures the price of one currency in terms of another currency. So the correct answer here will be A. It will measure the cost of the Malaysian currency in terms of the US currency. It does not measure the difference in the cost of living. Does not measure the difference in the standard of living, that would be HDI, and it does not measure the GDP of Malaysia divided by the GDP of the United States. Okay, that would be GDP per capita. Globalization is the process by which domestic firms become involved in international markets. What encourages globalization? Okay. So remember, we're going to be, what encourages specialization here, what encourages trade is essentially the thing we're looking for, okay? Because globalization is related very closely to trade. So what will encourage the exporting and the importing of goods and services is essentially our question. Controls on foreign exchange markets will not encourage globalization, it will discourage globalization. Because it will make it harder to import or export depending on what the country is doing, whether they're devaluating or revaluating their currency. Immigration restrictions will also discourage globalization because it will make it harder for people to move from country to country. The same with increasing tariffs. Remember that tariffs are taxes on imports, so that will restrict the level of imports that can come into a country. Therefore, it will make it harder for us to trade. But widespread use of the internet will encourage trade. It will allow us to compare prices between products and to order products from other countries, etc. Okay, 27. What is a benefit of a multinational company to the host country? Okay, so a benefit, an MNC may improve the reputation of its home country as a high quality producer. That may be true, but it's not a benefit to the host country, that's a benefit to the home country. Exports by an MNC may result in an improved trade balance for the host country. That is true. The MNC will come in and they will export from the host country, which may allow them to increase their exports more than their imports, which will create a trade surplus. Production by an MNC may lead to higher levels of pollution in the host country. Again, that's true, but it's not a benefit, it's a disadvantage. And profits made by an MNC are sent back to its home country. Again, that's true, but it's not a benefit, it's a disadvantage for the host country and an advantage for the home country. Okay, 26 to 21 are the same. They are all from question paper 11. So again, I'll circle the correct answers and you can just go back and take a look at the full explanations on May-June 2021 question paper 11 video. Okay, question 20. What may cause deflation? Right, so the first thing we need to answer here is, remember we have two types of deflation. We have bad deflation, which is where AD will move to the left, there's a lack of AD. And then we also have good deflation, which is where AS will move to the right. So we're looking for either a reason why AD would go left or why AS would go right. So if we start at the bottom, increases in the rate of inflation as measured by CPI, that's going to be as a result of AD moving to the right, because that's how our price level would increase, right? Or as a result of AS moving to the left. So we have an increase in our cost of production. So it's not going to be that. That would not cause deflation. That would be inflation, price level goes up. Increases in the cost of production, again, that would cause cost push inflation. AS would move to the left. We'd be producing less as our cost of production increases happen. Government using a policy of very low interest rates, that would move AD to the right. So it might cause inflation again, it would not cause deflation. It's expansionary monetary policy. If we have advances in technology and increases in labour productivity, AS will move to the right as we can produce more with the same amount of resources as before, so our cost of production would decrease. Okay, table shows the consumer price index of a country for 5 years. What statement about the country is correct? It faced deflation in year 2, so that's incorrect. We can see it's 120 in year 2 and it was 100 in year 1, so we actually faced inflation of 20%. It faced deflation in year 3, we can see that's wrong again. 135 in year 3 and 120 in year 2, so we had inflation of 15. It faced inflation in year 4, we can see that's correct. 140 in year 4 and 135 in year 3, so we've gone up by 5. When we go up it's inflation, and when we go down it's deflation. And therefore it faced inflation in year 5 is wrong. In year 5 it's 138 and in year 4 it's 140, so we actually faced deflation in year 5, not inflation. Okay, 18. The table shows sources of government revenue for an economy. What is the total amount of tax revenue raised by direct taxes? Okay. Remember, direct taxes are the taxes that are paid by the individual of the firms themselves. There's no third parties involved. So, sale of government assets is not direct taxes. It's just a sale of assets. Sales tax and taxes on imports, they are both types of indirect taxes because they're taxes on goods or services. Tax on employment income, tax on inherited wealth, and a tax on company profits are all direct taxes because they're all taxes that are paid directly by the individuals or the company themselves. So all we need to do is add these three together and we should get 650 billion. Okay, what is the money supply? So, not going to spend too long on this. The money supply is the total quantity of money available within the economy. Okay, it is issued by the central bank. They are the ones who will print the funds. The money available within the commercial banks and the total quantity of foreign currency available, they all come into the money supply, but they are not the money supply themselves. They're components of the money supply. 16. What is fiscal policy? So we explained this in QP12 and QP11. Fiscal policy is the use of taxes and government spending to influence aggregate demand, right? Money supply and interest rates, that is monetary policy, not fiscal. C, measures designed to influence total supply, that is supply side policy. Fiscal only influences aggregate demand, not aggregate supply. And regulation of the foreign exchange rate to influence imports, again, that can be a type of monetary policy. not fiscal. Only taxes and government spending to influence AD. Okay, diagram shows the total revenue and total cost of a firm. At which level of output will the firm maximize profits? Okay, so here we've got our total cost curve, and here we've got our total revenue. So basically the idea behind maximizing profits is very simple. It's going to be where the gap between total revenue and total costs is the highest. Okay? Because our profit will be calculated by the amount that we're selling, which is our revenue, minus how much it's costing us to make it. So if we're at A, we can see we're at break-even point here, where our total revenue is equal to our total costs. So we're not actually making any profit here, we're breaking even. Our profit is 0. Our costs perfectly match with our total sales. At point D, our total cost is actually higher than our total revenue. So D, we'd actually be making a loss. We'd be losing more money than we're actually making. At C, we can see the exact same situation as A. So total revenue will equal to total cost. But at B, we can see that our revenue is highest here and our total cost is here. So all this area would be our profit. So B would be our correct answer, as our total revenue, or the gap between our total revenue and total costs, is the highest. Okay, question 14. What describes the total revenue of a firm? This is very simple. The total revenue is the number of goods that we sell, so the quantity of goods sold, multiplied by the unit price. Total revenue is basically how much sales we have, and that's the price of what we're selling the product for multiplied by how many products we sell. Okay, how would advertising a good result in a retail firm increase its market share? Okay, so will it result in diversification of the firm? No. May allow us to focus on a specific area, as in the good results that we've had, but it's not going to increase our market share through diversification, right? That would be if we switch production. Will it improve personal service in the shops? Not really. We're not training staff on their skills, their education. That's what would result in personal service increasing. It's not going to increase the firm's costs. Okay, well, it may possibly as they advertise, but what it will do is reduce demand for competitors' products. As we advertise, we're going to be taking more customers away from our competitors as they see the good results that we've had. Our demand will increase, and if our demand increased, therefore the demand for other competitors must have decreased. Okay, question 12. A firm employs 10 workers. Each worker is paid a weekly wage of $200 and produces 50 goods per week. What is the average cost of labor? So this is very simple. Our average cost of labor is what it costs us to pay them divided by how much they're making. So if we divide 200, which is how much we pay them per week, divided by the amount of goods and services that each worker is making, which is 50, we should get $4. So that's our average cost of labor. The average cost per person, per good that they make. Okay, 11. What's a benefit to a worker of being in a trade union? So one of the benefits is, what we know about a trade union is that they're essentially negotiating for the employee, right? They're trying to give the employee better health and safety conditions, better wages, etc. So it doesn't guarantee a job. The employer still makes a decision on whether to keep them or to fire them. Doesn't give them an opportunity to work extra hours. Again, that's depending on the employer. And a benefit is not a payment of subscriptions. They may have to pay a subscription to a trade union. That's a disadvantage. They have to pay an amount every month in order to be a member. But another advantage they would get is that they get access to advice. So if they have problems with their wages, or if they have problems with, for example, their health and safety conditions in the workplace, they can get free advice from the trade union on how to fix that. Okay, what firms in the tertiary sector? This is a difficult enough question. Remember that the tertiary sector is basically, our keyword we remember is services, right? So we're trying to look here and we're trying to see which one is a service. So is a road builder a service? No, a road builder is likely to be in the secondary sector, where our keyword is manufacturing. Is it likely to be a fruit grower? No. They're likely to be in the primary sector, where our keywords is the extraction of natural resources. So a fruit grower is somebody who will extract natural resources. The resources are there already to grow the fruit, and then they will take them themselves. That's primary sector. So we're left between a bread bakery and a meal delivery. Essentially, we need to ask ourselves which one is more of a definitive service. Okay, and the one that's more of a definitive service is the meal delivery, because the only service they're providing is the delivering of the actual meals themselves. Whereas a bread bakery would still be involved in manufacturing or baking or making the bread themselves from scratch, so they may be included in the secondary sector, which is manufacturing, making something. Meal delivery, it's already made, they just deliver the meal, so it's a full 100% service. Okay, question 9. Average incomes rose by 5%, but savings did not rise. What might explain this? Okay, so consumer confidence in the economy fell. That's not going to explain it, because why would that explain why average incomes went up by 5% but savings did not rise? It wouldn't. If they had more confidence in the economy, they're more likely to spend the extra income that they have. If the confidence in the economy fell, savings would rise as their incomes grow, because they would start to spend less money. The rate of income tax was reduced. Again, that might explain why average incomes go up, but average incomes is looking at the gross total normally, right? Now, even if we take it as the net total, imagine they get 5% more, that wouldn't explain why savings did not go up. Interest rate for savings rose. Again, if interest rates for savings rose, we would expect that the number of savings would increase, not stay the same or decrease. However, if incomes rose more slowly than the rate of inflation, that would explain it. Average incomes might go up by 6%, but inflation might have been 6%, for example, which means that the real value of their income increase would actually be negative. It would be -1. So they would actually have less money now than they did previously, which means that they would save less money because it's more expensive to live. So even though they have 5% extra cash available, it's now more expensive to live, so they're saving less. Okay, question 8 is from question paper 11. Go look at that for the explanation if you need it. Question 7. The diagram shows the market for oil. The original equilibrium is X. Oil producers discover a new source of oil while there is economic growth. What is the new equilibrium? Okay, so we always break these up into two parts. First of all, we discover a new source of oil. So what is likely to happen here? That means our supply would shift to the right. We've got more oil that's now available, right? And if we've got economic growth, we know that when we have economic growth, it's because real GDP increases, right? And real GDP increases, national incomes go up, employment goes up, and living standards go up. And that means that we demand more goods and services. Therefore, with economic growth, we would start to demand more goods and more services, so demand would shift to the right, and we would be left at a new equilibrium point of C. Okay, question 6. What is a definition of market failure? Okay. Market forces of demand and supply do not allocate resources efficiently. That is a definition of market failure. We just need to learn that. Public goods are only provided by a government. That is a consequence of market failure. When they're not allocated efficiently, we don't have public goods. They need to be provided by a government. So it's a consequence of market failure, but it's not a definition. Private benefits of consumption are greater than external benefits. Again, we'd be talking about a merit good there potentially. Another consequence of market failure, not a definition of it. And the same with B. Okay, B is just how the market works. Some consumers can afford to buy goods and some can't, depending on their income levels. So question 5, what is an essential feature of a market economy? So remember, a market economy is going to have the price mechanism working to allocate resources and no government intervention. Okay, so in this case, central planners determine what, how, and for whom to produce. That's wrong. That would be not a market economy, but a planned economy, which is where the government will make all the decisions on resource allocation. Okay, it aims for equality in the distribution of goods and services. That's also false. It just aims for the most efficient distribution. It does not aim for equality in the distribution. Market price reflects both the private and external cost of production. Again, that's wrong. We know in a market economy, demerit goods will be overproduced and merit goods will be underproduced. Demerits will be overproduced and create external costs. Merits will be underproduced and create external benefits. So the correct answer here is D. The price mechanism sends signals to consumers and producers to allocate resources, which links into point B. That is the reason why we have the efficient distribution of goods and services, not the equal distribution. So if it was equal distribution, it wouldn't matter what or how much of a particular good and service people want to buy. But when it's efficient, if something is not required by people, private firms are not going to make that good and service because they're not going to make money out of it. That would still be efficient because we are meeting the demand of consumers. Okay, who is a microeconomic decision maker? So remember, microeconomics is study and behavior of individuals, firms, and individual markets and households. So, director of an international trade organization would be a macro decision maker because they would be making decisions on trade which would affect the whole economy. The entrepreneur of a firm, from my definition of microeconomics, we should be able to get that. That would be a microeconomic decision maker. It's only a firm, it's not the whole economy. Whereas the finance minister of a government or the governor of a central bank, they would be making decisions on monetary policy, supply side policies, etc., or fiscal policies, and they would affect the whole economy, so they would be macroeconomic decision makers. Okay, question 3. The PPC shows the hours per day that a person has for either work or for leisure. Person works 6 hours a day but then decides to work 9 hours. What movement shows this change? Okay, so we just need to go where they're working 6 hours, and that is point U. And now they're working 9. So what's happened? They've moved from U to T. And we can see here if we go to A, B, C, or D, correct answer is D. Okay, all you have to do is go to your curve, find 6, and then find 9 to see the change. Okay, really simple question. Okay, what condition in an economy would encourage immigration of labour? So remember, immigration is people coming in, and what would help people to come into a country? High cost of housing is definitely not going to help them to move in, is it? Going to make it too expensive for them. If employers are preferring domestic workers over foreign workers, that's not going to help people from another country to move in, because they're going to employ local people instead. If there was reduced quotas for foreign workers, same thing. We're restricting the number of people who can come in. Remember, reducing a quota means, for example, we used to let 40 foreigners come into the country to work, right? We reduce a quota, we're now only letting 20 foreigners into the country to work. So we're actually, when we reduce a quota, we're actually letting less people in than we were before. But if we have a shortage of skilled workers, that would encourage people to move into the country to bring their skills so that they can get jobs in that economy. And this has been a very quick one. So finally, last question. Increasing output of one good reduces production of another. What concept does this represent? That's opportunity cost. Making a decision which has a consequence of giving up something else. So increasing the output of one good means that we make less of the other good. That is the consequence that happens. Economies of scale is where as a company grows, their average costs come down. Diseconomies of scale is where as a company grows, their average costs go up. And average cost is just a calculation per unit of output, how much it costs a business to make a good or a service. It does not represent making a decision for increasing one good, therefore having to reduce the production of the other good.